Okay, so this is the COS 2021 tax packet, and we're going to go through each of the items in case you have some questions or you just want to kind of follow along as you fill out your own tax packet, and answer any potential questions you might have so you don't have to call the office and have to wait on hold during the busy season. So this is what you'll see whenever you input the link into your browser. Might look a little different if you do it on your phone. It's going to have a default tax year of 2021 since that's the tax season we're on right now. But obviously you could do this for any tax year, so 2019 or 2018, depending on what tax years you need done. But for most of you, this will be for 2021 and it should already be filled in for you. And then the next thing you'll see is special instructions for the preparation of this tax return. So this year's tax return for 2021. If you want to expedite your tax return so that it gets done faster, guess what gets put at the top of the pile? Expediting your returns puts your packet at the front of the line to be prepared next. It's $100 per tax return to expedite. So if you're doing a business and a personal tax return, it'll be $200 to expedite both of those returns. And if you're working on getting a loan with a lender, then if your lender has any special requirements that you need to have, if you need like proof of filing, certain AGI, things like that, you would want to put those notes in there so that we are aware of that as we're preparing your returns. The last thing, and this is pretty important, is are there any tax strategies that were discussed in your tax planning meeting that you want implemented for the tax year 2021? So it's important to note that even if we had discussed stuff in a tax planning meeting about maybe making your spouse a shareholder, or if you want to bonus depreciate or Section 179 a certain vehicle for the max deduction, even though we discussed it and we may have agreed on doing something on your taxes, you still need to request us to do it for liability purposes. So if something were to happen and there was an audit, we can't be blamed for making up information on your behalf. So that's why we have this box, is so that you can tell us exactly what needs to be done and it's documented, and then we can do it on your tax return. Once you fill out these special instructions, then this is kind of where the tax packet starts. So you're just going to put in your name and then date of birth. I mean, you can also just type it in like this. Your phone number, and then email. I'll put taxes at cosaccounting.com. And it's important that this should be your legal name as of the end of the current tax year. So if you have gotten your name changed on your social security card, or if you've gotten married and had your name changed, it needs to match what's shown on your social security card for it to go through the e-filing process. And then your social security number, that's obviously not mine, but address, and this address is important because if you elect not to receive your refund, if you're getting a tax refund, if you don't want it direct deposited into your bank account, this is the address that the check is going to go to. So be sure that it's an address that you have access to, in case, because obviously the IRS or the post office won't be able to forward a check. So make sure this is an address that you have access to. You need to attach a copy of your driver's license, which obviously you guys should all have access to, or if you have anything like it, just anything that proves that you are who you're saying you are, like a passport. And and I'm just going to attach a random document for here, but you'd want to attach your driver's license because for us to be able to e-file, we have to verify that you are who you say you are in this information. Your marital status, obviously if you're married, at any point during 2021, so even if you got married on December 31st of last year, then you can be married filing jointly as your marital status. Some of you might have questions about filing as married filing separately. We don't recommend that. Generally, it makes your tax outcome worse combined. So if you and your spouse were to file separately, like combining your outcomes together versus married filing jointly would be worse. Generally, people file separately if they're getting divorced or if like one of their spouses has child payments that the IRS is taking part of their refund out to pay for those child payments, and you don't want your part of your refund to be affected by your spouse's economic situation, then you would file separately. But generally, when you file separately, the outcome is generally worse. So if you're if you just got married and or if you are married, I would recommend you just file them jointly, unless you have a specific issue like I mentioned, in which case you can put in the notes that you want to file jointly and why you're filing jointly, and then we can do that for you. And then and then here you want to put your spouse information if you're married. If you're single, then obviously you don't have to fill this out, but to be able to file jointly and separately, it's good to note that if you still want to file separately, we still need your spouse's name and social security number to be able to file separately. And then just a phone number. And then also important for you to know is whatever email you put here for your email, whenever you finish the tax packet, you'll be sent a copy of the packet you filled out. So if you want to copy that, be sure you put an email that you check regularly in case you want a copy of that packet moving forward. And then obviously your spouse's social, date of birth. And then you need to attach your spouse's driver's license. I'll just attach a blank W-2 for that. But these are required fields, so you won't be able to submit the packet without attaching those two fields. Okay. So if you have any children, then you'll need to input your children's information. Here, I'll just put my last name. The gender of your child, and then their social, and the date of birth. And then if they were born in 2022, then they're not going to go on your 2021 tax return. So even if you're filling this out, let's say like in July or even December of 2022, and you had a child in 2022, you don't need to put them on this packet because they're not going to go on your 2021 tax return since they weren't born in 2021. But even if your child was born on December 31st of 2021, then you would include it. If you had to pay for dependent care, like a daycare or something, you can put that information in. We won't be able to take the deduction, the 4AGI deduction for your child if you do not provide the social security number of the person who provided the care or the business EIN. So if you leave this blank or you type in null zeros, then we won't take the deduction. So it's important that if you want to take that deduction, you have that in there. But I will just leave this as no. And then obviously if you have multiple children, then you can add all the children you need to. And I think our packet maxes out at 6 children. So if you have any additional children, you can just put them into the additional comments box here. Okay. The next section is employment. So any jobs that you were employed at in 2021, you will want to put that company there and then what kind of employment it was, whether it's either going to be a W-2 or a 1099. So you could have worked at, different sales companies and had a 1099. Your spouse could have worked at, a dentist office or, real estate company, whatever your situation may be, and that might have been a W-2. So it's important that every company that you worked for, they should have sent you a tax document, either a 1099 or a W-2, and you have to attach 1099s and W-2s for each one of those companies. So here you'll upload, let's say a W-2, and let me open it so you guys can kind of take a peek at what it looks like. Desktop and tax packet images. So this is what the W-2 is going to look like for 2021. It's going to have the businesses, whoever you worked for, their EIN and name or your spouse name, and your social up here. And then how much you got paid, how much you had withheld from your paycheck. So you'll need to track this document down for that job and then attach it there. If you have a 1099, generally you'll have a 1099 Misc. If you have rents and royalties and things like that, but if you made money with a sales company, most likely you're going to have a 1099 NEC, which looks like this. So this should just have the payer's name, which is going to be the sales company, the recipient, which should be your name or your S Corp name, and then box 1 will say how much you made from that company in 2021. So then you'll obviously attach that to here. Since I don't have a 1099 NEC, I don't believe, I'll just attach a 1099 Misc. But for every company that you have in here, you're going to need to attach a document. And if you don't attach all those documents, then we're going to have to reach back out to you, because we can't start or finish your return without having all those tax documents. And if we file with missing one, then we're going to have to do an amendment, and it's kind of a pain. So it's just best if you can track all the documents down. And then you get these from the company. So if you're trying to find this document, you'll get it from the company that you worked for. So if you don't have it, then you should call that company and request it. Okay. If you or your spouse receive any unemployment, then you'll get issued a 1099-G from the state Department of Workforce Services in the state that you received unemployment in. So a 1099-G looks like this. The payer will probably be Department of Workforce Services for California, Utah, whatever state you live in. It'll have your name and have unemployment that you received, and then if you had any withholdings, or if you had to pay any of the unemployment back, or if you received interest for prepaying your state taxes, you'll get a 1099-G as well. So you can attach that there. So I'll go ahead and attach a 1099-G. And then, did you or your spouse receive any Social Security benefits? If you did, then you'll receive a SSA 1099, which will look generally like this. So you can take a peek at it. And if you're trying to figure out where to get this from, you would get this from the Social Security Administration. They'll issue this to you. And it will have how much Social Security you received that year, your withholdings, and all of that. Okay. And then this section asks if you're going to be claimed as dependent on someone else's tax return. So generally, if you're in school or newly married, you or your spouse may be claimed, you or your spouse's parents may want to claim you or your spouse on their tax return. Generally, do not recommend that happens, as it's going to make your outcome worse or your spouse's outcome. But you obviously need to coordinate that with your parents, because if they file with you as dependent and then you try to file independently, then it's not going to go through. The IRS will kick it back, and you'll have to either have your parents amend their tax return, or you're going to have to file as dependent. So you just need to coordinate with your parents and your spouse's parents if you're married, what you're going to do. But I mean, once you're over the age of 24, it's pretty rare for you to be claimed by your parents. So it's really for those of you who are in school or who are still pretty young. You just need to get that coordinated with your parents. Okay. And if you lived outside of the United States for more than 6 months, Okay, so if you were due a refund and you want to receive it via direct deposit, then you need to put your banking information here so we can put it into your tax return. If you mistype a number or mistype an account number and we try to file it and it doesn't work, then the IRS is just going to send a check to the address at the front of the packet. So if it doesn't work, they'll just send a check there. So it's not like you won't receive your money if the number's wrong. But obviously, you just want to copy and paste from your bank account, whatever bank you use, just copy and paste your routing and account number, and then we'll just copy and paste it straight into your tax return. Okay, then here's your insurance information. Did you have any health insurance coverage? If you're covered through the marketplace or covered on Obamacare, then you'll get issued a 1095A from whatever company or healthcare company you work with, whether that be Select Health or whatever company is the company that's set up for Obamacare in your state. So you'll attach that 1095A, and then I'll open a copy so you can take a look at what it looks like. This is what a 1095A looks like. The marketplace identifier is usually the state. Policy issuer is usually the company, whether that be Select Health or whatever company you got the policy out of, and then your name, any dependents, and then obviously all the information regarding your payments. If you do not include this, then there's a good chance that if we don't know that you had a 1095A and we file without a 1095A, the IRS is going to send a letter and make an adjustment on your tax return, because you generally have to reconcile if you overpaid or underpaid on your healthcare if you're covered by the marketplace. So this is very important that you track down. If you're on your parents' 1095A, then we don't need this. Then your parents will reconcile with the IRS and you don't need to reconcile with them. But if you're the policy holder, if your spouse is a policy holder, then you'll need to attach this document. Did you have any non-premium or copay out-of-pocket medical expenses? Pretty self-explanatory. If you had to pay for anything out of pocket, whether that be meds or any surgeries you had to pay out of pocket, you just put that amount in there. Did you have a health insurance plan not provided by an employer? So if you're not on if you're on a W-2 and like you have health insurance with the company you work for, then that'll be covered on your W-2. But if you are self-employed and you pay for your own health insurance, then you get a deduction for being self-employed and having health insurance. So then you'll just put how much your premiums are for the year in that box right there, and don't include it if you have health insurance with Christian Health Share. Okay, now we're in the schooling section. So it's going to ask if you, your spouse, or if you have a dependent, if any of them were in school. And if you are, or if your spouse, you're going to have to fill this out for each person that was in school in 2021. So it's going to ask if you're at least a half-time student, which you have to be to claim the AOTC tax credit. If you received any scholarship, how much was your scholarship? How much did you spend in books, equipment, fees? This does not include tuition, and it does not include lodging. So if you had to pay for lodging, do not include that here. It's strictly for books, equipment, supplies, and fees. And then how many scholastic years have you been attending that college or a college? If it's 4+, then we need to know if you've taken the American Opportunity Tax Credit 4 times, because 4 times is the limit that you can take. So if you've taken it 3 times, then we can claim it 1 more time. If you haven't taken it at all, then we can still claim it 4 times. If you're unsure, then you're going to have to ask your parents or look at your past tax returns, and there's some information on how to check if you have claimed the AOTC in the past. But if you try to claim it 4 times and you've already taken it, or if you try to claim it a 5th time when you've already claimed it 4 times, the IRS will immediately send it back, and you'll get it. Your tax return will get adjusted. So if you've been in school for less than 3 years, then we know you haven't taken it 4 times. So it's only for those of you who've been in school for 4+ years that you need to worry about this section. And then you'll get a form 1098-T from your school, and you can find it in your student portal. There should be tax document, and it should say 2021, and it's going to look like this. Desktop 1098T. So it should look exactly like this. Filer's name should be the name of the college you attend with their EIN, with your name here, how much you paid in tuition and books, or not, sorry, this should just be tuition, how much your scholarships were, and if you're at least a half-time student. Sometimes they have some additional info worksheets, and that's fine if you attach that, but this is the page that we need. So if you have the additional info pages, but not this page, then we'll request this page because this is exactly what we need. So you'll attach that 1098T. Where is it? Right there. And if you have any additional comments or questions, you can obviously put that there. And then you're going to have to fill that out. If your spouse was in school, you have to go through the same process. And if you have a dependent that was in school and that you're providing their support and you're claiming them on your tax return, then you'll go through the same process. Did you make any student loan payments in 2021? Then you'll receive a 1098E from the institution you received a loan from for school. So a 1098E looks like this. The recipient lender's name is usually U.S. Department of Education, and it just says how much you paid in interest, as that's something that you can use to lower your income. Okay. So you're going to upload the 1098E there whenever you get that. And that should, if you have a portal with wherever you have your loan, whether that be the Department of Education or whatever lender you have, they're going to have a portal where you can access that tax document there. Okay, that's just the school stuff we went through. Okay, in 2021, did you do any stock trading outside of an IRA that would result in a 1099B? So if you traded on Robinhood, Acorns, TD Ameritrade, Bitcoin, Merrill Lynch, all of those brokers, they're going to issue you a 1099B, and you're going to have to attach that here. And then did you purchase or trade any virtual currency like Bitcoin and, all those different virtual currencies that are out there now? So if you did, you'll probably get you may not get a 1099B, but Coinbase will issue you a document of your trades. And it is important that you guys know that, especially for Coinbase and some of these other brokers that do virtual currency, it takes us a lot of time to figure out your basis and your trades. And so we do have to bill extra for the time that we spend trying to input all this information into your tax return. Same with stocks. If you do stock trading, then we have to put all the stock trades on your tax return. And so you'll notice that if you do have these tax documents, we may add a fee on your tax preparation if we have to spend a lot of time inputting it onto your tax return. I have a copy of a 1099B here, but this is usually not what it looks like for you guys. Usually you have a thick packet from Robinhood or whatever company, whatever your broker is. They'll send you a packet and it'll be a couple pages long consisting of your trades. And when you get that packet, you'll just attach that here. 1099B. And obviously if you have multiple brokers, you're going to attach all the different 1099Bs you got. Okay, if you got any interest income, so if you have like a long-term savings account, or you prepaid taxes and the IRS sent you a 1099 interest statement for the interest that they owed you or they paid you, then you'll attach those documents here. And I'll open a copy so you can see what it looks like. But obviously any company that you receive interest from, that's where you'll go ask for that document. Okay. Did you or your spouse contribute into an HSA, a health savings account, in 2021? If so, how much did you and or your spouse contribute in total? So if obviously you have an HSA, you're able to put money in there and it's the tax deduction. So you can put the amount you put in. If you have an HSA plan with a W-2 employer, do not include the part that they matched. So only include the amounts you put into your HSA, and do not include any matching that your company may have put into your HSA for you. Will you and or your spouse contribute to a retirement plan? So if you're going to contribute into a Roth IRA, traditional IRA, solo 401k, SEP IRA, it's important to note that for HSA and the IRAs, you have until April 15th of 2022 to either contribute into your IRA or HSA for 2021 or for 2022. So if you're filling this out early before April and you still plan on putting money into your HSA or IRA, and have it count for 2021, then you need to specify that in the notes that you're doing that, and be sure that you do it if we're going to file that on your tax return. So if you have a Roth IRA and you contributed $6,000 for yourself, and let's say your spouse also contributed, you guys contributed $6,000 into your spouse's IRA, then you'll put $6,000 there. Sometimes you get tax document for these. I think it's called a 5498. It shows the fair market value of what is in your IRA account, and you can attach those there. For solo 401ks, that would be pretty helpful to know, especially if you actually have a solo 401k set up through your S corporation, or if it's just through your W-2 employer, if you can track those documents down. But that is not required. Okay, moving on. Did you take any distributions out of a retirement account in 2021? So did you pull money out of an IRA or your solo 401k? If so, you'll get what's called a 1099-R. And let's see if I have a copy of that to show you. Here we go. So the payer is going to be whoever, obviously you have your retirement account with, whether that be TD Ameritrade or Merrill Lynch. How much you pulled out of your retirement account, how much is going to get taxed. You also get this document for rollovers, which we'll cover in a second. But you would need to track this document down and attach it here. 1099-R. And then same thing for a rollover. So if you rolled some money from a traditional IRA into a Roth, or vice versa, from a solo 401k into a Roth, then you'll also have a 1099-R for that transaction. Okay. Did you make any charitable contributions to a church or nonprofit organization? If so, which church or nonprofit did you donate to, and how much? So let's say Nothing But Nets, and let's say $500. Now, it's important for you guys to know that generally, unless you take the itemized deduction, which you can Google and read about, generally charitable contributions are not used on your tax return unless it exceeds around $12,000 or $24,000 if you're married filing joint. So the IRS is allowing you to take up to $300 of your charitable contributions. So you might see on the front of your 1040 tax return, your personal tax return, that you're taking $300, and you may ask, well, I donated $500. Why is it saying $300? And the IRS is saying you can take up to a max of $300 on your tax return if you're taking the standard deduction. If you're itemizing, and let's say your itemized deductions, which include charitable contributions, your out-of-pocket medical that we did above, real estate taxes, mortgage interest, if all that exceeds the standard deduction, then that will all come into play. But generally, it's not used except for the $300 amount if you're taking the standard deduction. And if you donate to multiple places, then you can attach, or you can state what those charitable contributions were. If you donate any goods, let's say you donated some clothing or some furniture to DI, then you can put that here, and you have to have that receipt that they gave you. Which if you donated more than $500 worth of donations, then you have to attach that receipt, but it's not required if it's 500 or less. And then obviously if you donated multiple goods, then you attach all of the donation of goods. Did you pay state income tax last year when filing last year's tax return? If so, provide the amounts and to which state you paid it for. Only provide amounts paid for previous year's state income tax. So if you owed California state taxes last year and you paid it in 2021, then you'll put California and then the amount you paid, as that is also an itemized deduction. Okay, so you can see like an example right there as well. Did you own your own home or have a mortgage on your own home at any point during 2021? So do not fill this out if you rented it out at some point, because that's considered a rental property, and then you'll do that below here. But if you just have a personal residence that you lived at, you'll just put how much your property taxes were, whether that's is usually located on your 1098 mortgage interest statement, which I'll show you a copy of right now. So show how much mortgage interest you paid, what your mortgage outstanding balance is, any premiums. Generally, there's some escrow information down below, and you can usually see how much your real estate taxes were in the escrow statement. And then you can put that amount in here. And then you can also upload, you'll need to upload your 1098 mortgage interest statement. And the mortgage interest that you paid and your real estate taxes that you paid are an itemized deduction. Okay, if you sold a home, like last year or in 2020 and maybe in 2021, a lot of people were selling their homes because the market was very high. And you want to qualify for the home sale exclusion, then you're gonna have to fill out this information. So how much did you buy your home for? Is that 30 or 300? 30. And then when did you move into the home? Or I guess this would be like, I don't know, 2018. And then when did you move out? And obviously you'd have to have sold it in 2021 and not in 2022. And then if you have the closing documents from that home sale, you'll need to attach those here. I don't have a closing document to show you, but you know what those look like, and whoever you close with, they'll give you those documents. So that will allow us to know how much you paid in commissions to the real estate professional and all of that stuff that will help lower your gain. Now, if you lived in the home for more than 2 years, then you'll be able to exclude either $250,000 or $500,000 of any gain you may incur. If not, then you may have long-term or short-term capital gains tax, depending on how long you lived in the home. And we'll provide more information on that, but we'll try to do the home sale exclusion for you if you qualify. And that's also important to note that is additional form that we have to fill out that takes additional time. So we'll bill extra for that. But that's obviously a very important form, because if you qualify, that could be saving you tens of thousands of dollars in long-term capital gains tax. Okay, and then if you had multiple homes, then you'd obviously fill out how much property tax you paid for the second home if you moved in the middle of the year, or if you have 2 homes, and attach a 1098 mortgage interest statement for that home as well. Did you pay for a solar panel to be installed on your roof in 2021? If so, how much did you spend to install it? If you installed solar on your home in a previous year and have some carry forwards that you didn't use the full tax credit for last year and it's carrying forward to this year, then we need a copy of your tax return. So you can attach that at the very bottom. It asks for any additional tax documents somewhere. Yeah, if you just attach it here, any other tax documents, we need a copy of your previous year's tax return to know how much carry forward is left, so we can transfer it to your return for 2021 or whatever year we're working on. Okay, and that's what that question's asking. And then here's where you would attach your previous year's tax return. But we do need a copy of that to know how much the credit is. Okay. Any rental properties or owner occupied. So if you're living in your home and renting out some of the rooms, this is where you'll put that information too. Single, this is pretty self-explanatory. What kind of, if it's a commercial building, if it's single family resident, multifamily resident, like if it's a duplex, you'll put the address. Um, if you stayed in the property, um, what percentage was owner occupied and how many days did you rent it out? How many days did you use it for personal use? These are all questions that are asked on the tax return that we need. When you purchase the property or when you begin using it as a rental property, and then how much it was purchased for, so that that way we can depreciate it and lower the income from your rental. If you have a mortgage, then you'll attach a 1098 mortgage interest statement. But if you don't have a mortgage, then obviously you don't have a 1098 a mortgage interest statement. How much your rental income was for 2021. If you received 1099s, you'll receive a 1099 MISC, and you'll have box 1 filled in for rents. So if you get that, if you have like a management company managing your rental for you, they'll probably send you this. In which case you'll attach that on right here. If you had any remodels, then you'll need to fill that out. How much it costed you when you had the remodel. It'd have to be during 2021 for us to be able to write it off for 2021. So if you had to redo the roof, if you had to redo it, like if you had to knock down a wall, do electricity, things like that, you would have to input that information in here. If you had to furnish the rental, so you had to buy like couches, bedding, and things like that, then you could put that in here. And then here's your rental expenses. So advertising expense, cleaning and maintenance, very generic expenses. If you have any additional expenses, then you can put them in the comments. And if you have any additional rental properties, then you'll have to fill one out for each rental property. And I believe we have up to 5 or 6 rental properties you can fill out. If you have more than that, then you can email taxes at COS Accounting, and we'll send you some documents where you can do additional rental properties. But right now, our packet is only built to do 5 or 6. Okay, and the last section is your business expenses. So based on your industry, you may have some expenses that are more tailored to door-to-door sales, or if you have a general business, you run an e-commerce store or carry inventory, these expenses will be more tailored towards your business. So I'll fill it out for door-to-door. And then if you are shutting down your business, you need to indicate here. And it's important to know that whenever you shut down your S corporation, you have to have a final tax return for the S corporation and a final quarterly report for your S corporation, because you can shut those down separately, but they have to be done, both of them, for your S corp to be fully shut down. And then do you have multiple businesses so let's say if you have multiple S corporations, we have a few clients that have multiple businesses that we're preparing returns for, then you need to indicate which business you're filling these expenses out for. And instead of filling out a whole separate packet for your other businesses, you can attach an Excel sheet or a PDF of your revenue and expenses, a P&L here. That way you don't have to fill out multiple packets. You can just attach all the other documents for your other businesses here, but be sure to specify which business it's for. Okay. Has your business had an address change? If so, then you're gonna have to put the new address. If you move over state lines, then we're gonna have to shut down your LLC in one state and all those state accounts, and open it in the new state. And it's gonna have a lot of like additional fees, because we're gonna have to set up in the new state, and that has additional fees for setting up in that new state. So if you do move over state lines, we'll be reaching out to you about that, as we'll have to move over all your state accounts. And here it talks about the home office deduction, and you can read through all the qualifying criteria. But to be able to take the home office deduction, you have to have a room in your home or wherever you rent that's set aside for your business. and it has to be like specifically for working only. So you can't just have like a desk in your bedroom. It has to be a separate room where you have a home office, everything's set up, and you don't do any personal activities in there. So if you have a dedicated home office space that you use, then you might be able to take the home office deduction. So depending on whether you rent or own the place you live in, it will ask the questions on that will help you calculate your home office deduction. So let's say we're renting and you need to figure out the square footage of the room that you use for business. So let's say it's 250 square feet. And let's say that the total square footage of my home is 1,000 square feet. So that means my rent and renter's insurance, utilities, 25% of that is for my business, since 250 square feet out of 1,000 is used for business. So I'll be able to take 25% of my total rent, utilities, any shared expenses such as internet, as part of the home office deduction, assuming that I actually used it. So that's what this question asks. How many months was your home office used? At least 15 days. So you can't just have a home office and not use it to take the deduction. You actually have to work in your home office and use it. So obviously you can't put more than 13 or put more than 12 months. It has to be between 0 and 12. Um, and then you have the option of doing the regular method or the simplified method. Simplified method, you just take $5 a square foot up to 300 square feet, and your deduction's maxed out at 1,500. So right now we're getting a home office deduction of $1,250, but let's say this is 300. It's going to max out at $1,500. Any square footage above that, it's just going to be maxed at 1,500. If you want to do the regular method, which you could get a deduction higher than that, then you'll have to track down your annual rent, annual utilities, and your renter's insurance. And if you own the home, it's going to be your mortgage interest on your 1098 mortgage interest statement, real estate taxes, utilities, homeowner's insurance. And like I said earlier, let's say this is 250. You get to take 25% or whatever the business use percentage is as a deduction. So right now you see you're getting 25% of 10,000 as a deduction. So if you're able to calculate all of these, you could get a higher deduction than 1,500, but it requires you to track down that information. But let's just say that we rent and then we want to take the simplified method and we'll just take 12,000 or 1,250. Okay, and then here's all the business expenses: advertising, accounting, anything that you pay us will include on your tax return, so you don't have to go track that down. Cell phone bill, all the stuff that we would have covered in our tax planning meeting. If you have any sales reps or if you had to pay out any 1099s, then we'll ask if you issued 1099s for those amounts. Generally, if you pay someone more than $600 and they don't have an S corp or any kind of business, you'll generally have to issue a 1099. So if you're a sales manager and you have reps underneath you and you have some kind of marketing deal where you get paid and then you pay out your reps, you'll have to issue 1099s to your reps so that they can pay their taxes. Okay, and then any additional expenses that are not on here, you can just put in the additional comments and we'll add those on as well. Okay, so let's just clear that out. Let's make this a little simpler to look at. Did you work out of state in 2021? So if you did work out of state, then you can claim per diem and you can just put the state you worked in, the city that was. If it's not on the list, then just pick the one that's closest to it. How many days you sold there, and then how much you spent in actual meals at that location. So how much you spent at restaurants while you're working out during the day. And then per diem for state 2 if you worked in a different state, and so on. If you didn't work out of state, then just how much did you spend on meals when you were working, and then how much did you spend on recruiting meals. Okay, so this section asks if you had a business vehicle. If you did not have a business vehicle but you still drove some miles, then you can put that there. Otherwise, if you did have a business vehicle, it will ask for miles. And and all your actual expenses for that. So even if you bought a car and you want to depreciate it, this is where you would put it. You'd put the purchase date, when you started to use it. It obviously had to be purchased and started to be used in 2021 for us to be able to take the deduction. Year, make, model. If it weighed over 6,000 pounds or had a 6-foot bed, which is important because if it weighs over 6,000 pounds or has a 6-foot bed, then you'll be able to write off the full amount of the purchase price. If it was under 6,000 pounds, then you'll be able to write off up to 18,100, assuming it's 100% business use. Amount you paid in parking and tolls, how much you paid for gas repairs and maintenance, miles. And if you're not sure whether to depreciate or take the mileage deduction, we'll essentially do the calculations for you and see if maybe long term it'll be better to take miles on this vehicle or take depreciation. And we'll let you know in the outcome email. And if you want to do the other way around, you just let us know. We'll update it. How much you spent on insurance, and if you have a loan on the car, how much you paid on interest payments. And if you have multiple cars or sold cars during the year, then you would add those vehicles in here as well. Okay, any additional comments, anything that you can't really put into a certain box, you can just put in here and we'll address those. Okay, so for 2021, you're able to recover the third round of stimulus that came out early 2021, which is about $1,400 a person. So if you had a child that was born in 2021, you'll be able to recover that as part of your 2021 tax return. It's important that if you do not put the exact amount in here that you actually received, the IRS will send you a letter and they will adjust your tax return. So let's say that you're filing on your own and you tell us that you didn't receive the third round of stimulus, or that you didn't receive it, but you actually did. So now your outcome is increasing your refund by $1,400. Well, the IRS is going to immediately send it back and say, we adjusted your tax return and we're reducing your refund by $1,400. So it's important that you actually know how much you received for the third round and put that amount here so we can know how much you can actually recover. And the IRS said that they would be sending out a letter telling you how much they sent you. So if you have that letter, attach it here, and that will be extremely helpful so we can avoid you getting those letters from the IRS. And just so you know, that's an automatic letter. So it's not like you're getting audited. If what we put in your tax return doesn't match up what is in their system, the system will automatically just send the letter out. So a lot of the letters you get from the IRS are just auto-generated. For those of you who had kids or have kids in 2021, you may have been getting checks throughout the year of an advance on your child tax credit. If you did, the IRS sent you a letter telling you how much that you got paid. So we need that letter because that directly affects your tax due, just like the stimulus. So if it's off, the IRS is going to adjust it for either good or bad. And it's just good to have it correct the first time around. So if you can track down the letter, then we can have that correct. If you don't have a letter and you say you lost it or something, just put in the additional comments how much your monthly amounts were that you received from the IRS. If you have a first-time homebuyer credit repayment due, then you'll attach that here. If you've ever been divorced, then you'll have and you pay alimony or receive alimony. If the divorce was finalized before 2018, then you can deduct the alimony payments you made, or if you received alimony, you'd have to show that as taxable income. But for any divorces after 2018, that's no longer applicable. Do you have any K1s for businesses whose tax returns we aren't preparing? So if you're part of some family trust or some family partnership, or you're involved in some car dealership or any other business where we don't prepare the tax returns for it, you'll receive a K1. And I'll show you in general what a K1 looks like. This is generally what a K1 looks like as part of the tax return for the business. So you'll need to track that down for the business, and you can just contact whoever the managing partner is or owner of the business, and they should be giving that to you whenever they file the tax return for that business. So if they're holding off on filing the tax return for that business, then you're going to have to wait to file your taxes until that's done, or file your taxes without it and then amend once you actually get the K1 from that business. So I just recommend that you wait. But obviously, if they're taking forever and it's beyond the deadlines and you're incurring failure to pay penalties, then you might just want to file and then pay most of your tax up front. Okay. Did you make any estimated income tax payments? So you're able to prepay your taxes throughout the year, which generally we don't recommend because cash is king. You always want to hold on to cash as long as you can because you can always put that elsewhere and make more money rather than prepaying your taxes and then asking for a refund of that money at the end of the year. But if you do make estimated income tax payments, it's important that this is not the amounts you pay for your self-employment tax on your quarterlies with your S Corp. This is separate from that. This is if you pay the IRS directly for your income tax for 2021. Generally, you get little vouchers on your previous year's tax return that you send in every quarter to the IRS to prepay your taxes for the next tax year. So generally, most people don't do this. This is essentially the same thing as having money withheld from your paycheck to prepay your taxes. But if you did do that, then you need to tell us how much you paid for federal income tax and how much you prepaid for state income tax. And if you have multiple states, especially, then you'll need to attach a breakdown of how much you paid to each state and when you paid it, so that we can put that on your tax return. Okay, and this is the end of the tax return. I mean, did you have any other tax documents in there you haven't been able to attach? So if you have something that we haven't asked about, if you have like a 1095B or something, you can attach any other tax documents or anything else here. And then you need to sign here saying that you want us to use all the information you provided as shown on your tax return. If you ask us to change anything on your tax return after you've submitted this, and we've already prepared the majority of the return, and we have to go back and update what's already been done, then you agree to the update fee of $50, as we have to go back and redo the tax return, recreate the tax return PDFs, upload them to your files, reprint out all the vouchers. We have to charge for that. Otherwise, we're just wasting time on our end for all the people we have doing those services. And then also a disclaimer here, in addition to the information provided, you're also agreeing to COS Accounting's policies and procedures, including additional collection interest fees that may incur if your balance gets overdue or gets sent to collections outlined in your tax dome account. So you can find those policies and procedures in your tax dome account, but if you get sent to collections or if you have an overdue balance that incurs interest, then you agree to pay that as part of the tax preparation service. And then any feedback you have about the tax packet. I know a lot of people had issues last year about there being pages and not being able to move on. So we made it one big long form so that you could skip to different sections and not have to worry about completing certain pages. So we appreciated that feedback, and any additional feedback you receive, you can put in here and we'll take a look at it and see how we can best make this packet better for next year for you guys. And then if you guys did skip sections because you were, let's say you wanted to finish the packet, but you weren't sure what your expenses were, you were going to go back and get those numbers. This is kind of a reminder to like look back at the packet, and if you skipped anything, to go back and fill that stuff out before you submit. And then if you try to submit and you have some things you haven't filled out, then it's going to send you back and you have to fill out everything that's still required. And those should all be marked in red. So I think the only one left was the vehicle that I didn't fill out. Oops. And then the first time home buyer. And then no here. So now I should be able to submit. And then you're done with your tax packet. And we'll get it in our system. We'll print it out and then start preparing your returns as soon as we can. As soon as we're done, we'll send you the outcome email and any notes that we feel like you should know. Thank you again for using our tax packet.